Good afternoon. I am Paula Fontana, Vice President of Strategic Programming Initiatives with the National Black MBA Association, and it is my pleasure to welcome you to part one of our Entrepreneur Essential series, where today's topic is the entrepreneur's edge. So I also have the honor of introducing our powerhouse of a moderator for today who hails from our Chicago chapter. So bright, bold, and resourceful are all attributes that have been used to describe Melinda Jordan, affectionately known as MJ the Closer. So she is an energetic and sassy Southern belle. She has over 20 years of brand marketing and business management experience and is currently a multi-million dollar selling realtor. So she's the perfect example of transitioning from corporate America to entrepreneurship. So I know she has tons to add to this conversation today. She is influenced by her maternal grandfather, and she believes and lives by this mantra, which I love so much from the Bible. Whomever much is given, of him shall be much required. And to whom men have committed much, of him they will ask the more. MJ, so happy to have you. The floor and the session is now yours.
Well, thank you, Paula. And as they've stated, we are super excited that you guys are here. But I hope you've got your notebooks, your pens, because this is going to be a phenomenal session. I get the privilege of having a chat with Mr. Jarrid. I'm going to say it twice, so because we've seen his name a number of places. Mr. Jarrid Tingle. This Jersey boy is just phenomenal. We are talking with him today for a number of reasons. One, he is the co-founder and managing partner of Harlem Capital. I've read that it's the second largest Black firm of its kind in the US. So keep me honest, Jarrid. It is a $40 million venture capital fund on a mission to change the face of entrepreneurship, in particular for 1,000 women and minorities over the next 2 decades, the next 20 years. He has received so many accolades, all of this under the age of 30. I mean, how phenomenal is that? From Forbes to Ebony to Inc. 30, the list just goes on and on. In addition to that, he serves on the board for the Penn Fund Executive Board. Now let's talk about this guy's education, right? An MBA from Harvard in 2019. I know, right? He's been sharp since preschool. A recipient and fellow, participated in the Management Leadership for Tomorrow MBA program. In his career, prior to becoming an entrepreneur, he was a private equity investment professional at ICB Partners. And before that, an investment banker in the global technology, media, and I mean, the list just goes on. And we are so excited to have you here. We're looking forward to you not only inspiring us, but engaging us in a higher level, a different mindset around entrepreneurship. So again, we're gracious that you're here and we look forward to the conversation.
Thanks for having me.
Exciting. So for all the ones that are joining this party during their lunch break, please feel free to note your questions in the Q&A, the chat as well. We want this to be interactive. This is a true conversation. So the idea behind fireside was actually developed by Franklin Roosevelt as he communicated out to the world about things that were happening around the world. And so we've since graduated that phenomena to having real, intimate, personal conversations with parties that are influencers. So my first question to you, Jarrid, is this. With all those accolades, tell us a little bit about young Jarrid. Like, how did we get to entrepreneurship? We want to know where did all this start?
Yeah, no, I mean, it starts in New Jersey. outside of Philly, and
Mhm.
I was raised by a single mother who actually left or paused college to have me. She was, I guess, had me during her junior year of school. So that was an interesting kind of origin story. So was with her, and I did not have my father actively in my life, but I did have my grandparents. So I had a lot of love regardless. Never had a lot of money. My mom did spend some time on welfare, but between her and the grandparents were able to really try to give me the best education possible. And because the schools aren't great in my area, they tried to get me into private school. So I recognize that privilege. Um, it was tough for me though, because even though I had a great education, most people that I was with, weren't Black at school, even though I lived in a historically Black town. And a lot of them had much more wealth. They had bigger houses, they had multiple cars, they had pools and stuff. And I was even scared for them to see what my mom was dropping me off in. So that was a weird situation growing up. I eventually got through it, but I channeled that energy into just working hard and being competitive in a healthy way, right? I'm like, okay, well, I don't have X, Y, and Z. I don't know why, but I can control my grades. I can control my performance, and I'll try to do that. So that's really what happened growing up. I mean, I definitely was stubborn. I wasn't, hyperactive or anything, but I was stubborn. Like I wanted to know the rationale for anything that somebody was asking me to do. And if someone, just because they were in an authority position, asked me to do something that didn't make sense, I was like, hey, I don't get it. And sometimes I got in trouble as a result. But I think that mindset, carried me
Mhm.
well over time. Um,
No, thank you for that. So I hope all you guys picked up on. It's okay if your children might be just a little bit on the stubborn side. This is where it could end up.
yeah.
So with that, I read that you initially wanted to pursue engineering, but I think you did a program at MIT and you were like, you know what?
Yeah.
I think I'm going to pivot. Is that what led you to study economics and finance at Wharton for your undergrad? Is that kind of?
Yep, that's right generally. So I was at a Quaker school. I don't know if anybody's familiar with that. It's more of an East Coast thing. They're pacifists. They've been traditionally, they were very, open to people of color. They actually were very involved with the Underground Railroad and kind of letting enslaved folks or formerly enslaved folks stay. And that's why a lot of historically Black towns are right next to Quaker towns. Little history for those that aren't familiar. Um, when I went to middle school, I went to school in Philly, another Quaker school. But when it's time to go to high school, like we just did not have the money. But unfortunately, I found out about a program called New Jersey Seeds. I thought it was a scholarship program. What it really was, though, was a program that prepared you to go into either independent boarding or day schools. And if you got into the program and then got into school, they would cover about 95%. The school would. You would basically be guaranteed a great financial aid package. So you get great education, but then what are the social dynamics going to be like? That's really what's up in the air. And some people, had a tough time. Some had less of a tough time. But, I always had that. I wasn't necessarily happy in all those places, but I recognized that I had an opportunity, and I was always going to maximize it to the best of my ability. So I was interested in engineering because I love math. I love science. I said, hey, like engineering seems cool. They build stuff or they're involved in pretty cool work. And so I got into a program at MIT, summer program, 6 weeks, introduction to engineering for, minorities pretty much. I also got into the lead program at Wharton. So again, I realized how fortunate I've been, like right place, right time, good recommenders. Like I'm not going to say people haven't been helpful. People have helped me the whole way. I chose MIT. It was tough, right? Because I had a lot of friends going to lead. I knew it was going to be a party. I decided to go to MIT because the program was paid for and it was a little bit more prestigious. And so I went, and it was tough. I had a good time because peer group was great, but it was hard. Like we were taking real classes. We ended up pulling all-nighters, and I was like, wait, this is what college is going to be like? Nah, like I'm not going to do that. And so it's an industry where like you get 95% done, and it's still not enough, right? You're spending that last couple of hours trying to get 100%. And I'm like, no, I'm going to bed. And so my mindset was just different. And about halfway through the program, I'm like, hey, I'm going to go to business school. I want to use my social skills, and I want to, work with people and I want to be around money and finance. So I didn't really know anything about that other than what business did at a high level, but that encouraged me to go to apply to Penn.
Right.
I applied early decision. Loved the fact that it was in the city. I loved the fact that they really value diversity. It had a cultural center for Black students,
Right.
and I felt like I could get a good business education there. It's funny because it came around, even though my college experience was better, my work experience has been tough. And so the engineers, they work hard in school, but then they have decent lives after.
Yeah.
Finance people, school's great, and then you go to work and then you get crushed. So it caught up with me eventually, but I'm grateful for all those opportunities.
Full circle, right?
Yep.
Yep. So love it. So I hope, like I said, I hope you guys are taking notes. So here's what I heard. As I mentioned before, this dude has been sharp since preschool. I don't know that I was doing that kind of thinking in my 20s. I probably would have chosen a party school, but you know, yeah, we can talk about that offline. So my next question is, so my understanding is you and a number of your partners, you guys have been connected for a number of years. And it was through your working experience that you embraced the idea that there was more to do to close the gap. And I've heard you all say quite often that doing well by doing good is really your mission. Mm-hmm. So do you mind talking about that a little bit? How did you guys get to Harlem Capital?
We were friends for several years before Harlem Capital. We all met through the Management Leadership for Tomorrow program. There's several aspects of it, but this is the college prep program, right, essentially helping people of color get into Fortune 500 companies. But it's really a great social network too. So you have a class of about 200, 250, all different schools. You have a lot of fun. You do a little bit of work. It was great. And you have this peer group who will go with you through time, and I continue to see them doing really well. But I met Henri and Brandon there. We weren't super close, but we became friends. I actually lived with Henri for the summer between my junior and senior year of college while we were doing banking. And once we all got to the city, we were doing finance and just stayed close. Had a lot of fun, complained about work, but then went out and celebrate each other's birthdays. We're always at each other's housewarmings and stuff. And it was a really good time just seeing us all, kind of budding in our careers. We got closer though when Henri and I ended up both getting jobs at ICV Partners. So this is probably one of the top 5 Black-owned private equity firms in terms of AUM. So that was a great experience for Henri and I. We were in a smaller environment. We were people that looked like us. We knew we were going to be treated fairly. And even though we have been doing well up to this point, it's what I like to call our HBCU experience, right? Like you're literally with people who are 20 years older. You can visualize what success looks like. It's not like, hey, is it going to work out? It's like, no, if I keep doing what I'm doing, I know I'm going to be just as successful as these guys because like I'm as smart as these guys. I'm just a little bit younger and less experienced. So that was eye-opening, and I think it was empowering. And we realized we had the tools to start our own firm. Like, is it going to be 5 years from now? Is it going to be 20 years from now? We don't know, but we're able to do it, and we were just pushed to grow. And they did some structural things, like they encouraged us to take ownership of our work. We presented investment committee materials ourselves. Like, so basically, we're going to potentially consider a transaction, and it would be the associates at the bottom presenting the memo, right, and taking ownership. We owned some companies, and we had coverage. And so when it was going to Middle America to see some CEOs and go to the dinners, like we were in those rooms talking to them, and it just really leveled us up at a really quick rate. Harlem Capital, though, we started 4 months into ICV. The stock market wasn't doing that great at the time, kind of like, I guess, the last month or so. It was flat. We saw all this happening in technology, like where that was taking off, and we just wanted to do more for ourselves. We wanted to be active investors. We didn't have any economics in the fund. We wanted to really, kind of grow our equity faster and find a way to really sharpen our investment tools. So it was an idea, right? It was like 5 or 6 friends just decided to pool money. One day we talked and said, hey, let's put in 10K in a bucket. Let's go out and try to find some startups. We'll do small businesses. We'll do startups. We'll do real estate. We'll do it all. No plan really. But we'll say, hey, we'll meet every other week. We'll come with an agenda and we'll learn as we go. Like we'll just start looking for opportunities. We'll figure out what we like then. That turned into what Harlem Capital is today. We started off by investing in a coffee shop, realized that wasn't scalable. We had to do venture. Eventually became focused in a couple of months on people of color and women. We saw that they had great companies. We had a great network there, but they were having a harder time raising funding. Ultimately, early stage companies, it's a lot of bets on the founder. It's about future, and there's not a lot of data points. And I think in an industry where it's so subjective, you actually need representation to make sure the dollars flow. Otherwise, it's just never going to happen. And so we didn't know that at the beginning, but we realized we were getting a ton of interest and people wanted to see what we're doing. And we're getting articles and stuff, even though we're 25, writing 25K checks, like things that are really small in a grand scheme of things, but it really meant a lot to people. And like, hey, let's pay attention here. Like maybe there's a real market opportunity to turn this into a business. And so eventually made 6 investments over 2.5 years, went to business school, and then decided after, I didn't get the one job I wanted, I could have kept recruiting. Henri didn't want to work for a firm that didn't have Black partners. We were getting traction at Harlem Capital. So instead of going and doing an internship, we decided to try to raise a fund, and the rest has been challenging, but we were able to get it done.
No, that's a phenomenal story. I think we all can take away from that the commitment and the passion, but also leveraging your resources, meaning not only your expertise, but the access you have to those rooms, that there's real power and strategically networking.
Mm-hmm.
Right?
Yeah, I think that's right. I mean, we have the mindset of what got you here won't get you there. And so, right, there's valedictorians that crash and burn all the time in the workforce, right? Like I was never valedictorian or anything. I always did well, but I've always been focused less on just the grade or the job and more about how I'm building skills over time. And I also know that I'm going to have to continually grow and adapt for the next set of challenges. So what makes you a great analyst in investment banking is very different than what makes you a great private equity associate, which is very different than what makes you a great fund manager. So I've always had a growth mindset. I did need some help, and that's why it's great to have a team. But we've always been focused on like, hey, what do we need to do? Let's shed the things that are holding us back. Let's adopt the things that will help us go forward. And one of the things that we've done for, I guess, 4 years now as an AIM syndicate in a firm is heavy feedback, like really digging in, 360 feedback, where twice a year we go all in. Sometimes your feelings are hurt, but it's really iron sharpens iron. And we've been able to grow and adapt. And if we have some blind spots, like let's dig in and let's try to fix it, because we're in this for the long term.
No, perfect. You saying that just reminds me of Warren Buffett quote that your best investment is in yourself.
Absolutely.
So I know that your team also, you as a product of understanding the dynamics in the market and in the gap around women and minorities, you guys produced a report. I think you call it the Power 200 report, and you were able to hone in on that. Of the billions of dollars that are being offered, about 2 to 3% are coming to women and minorities.
Yep. Yeah, so I can talk about that if you want. So we have two sets of reports that we've done. One is called our diversity report, which is really us finding Black and Latino entrepreneurs that have raised over $1 million. So our last version came out a few weeks ago, and we found over 305 in aggregate. So that's in addition to the 200. It's cumulative. So last year it was 200. Now we added 105. So now we're at 305. So that's pretty cool. Just seeing that grow. We're seeing more unicorns, more people having bigger rounds, quicker rounds. That's all great. We've also separately did the Power 200 report, which I think we haven't done in over a year, but that was just mapping Black or Latinos in VC. So people actually in check writing positions in VC. So both of those things are important. We're focused on the funding gap. We're also focused on representation in the check writing capacity. So what we do is we focus on backing entrepreneurs that are diverse. Black, Latino, women of any race. We wanted to keep it broad to start, because if you're too selective, that can actually inhibit your success. And we wanted to make sure in any market, in any conditions, it's cool to be a Black entrepreneur since this summer, but before then, who knew? So we wanted to make sure we could always work with the market. Even though 90% of our portfolio fits into this, 50% of our portfolio is Black Latinx. So we've been definitely walking the walk there. But the other piece is helping to get more diverse professionals into VC roles. And so we have our team, which is very diverse. And then we also have our intern program. We've hired 58 interns over 10 classes. 17 have either went into VC or private equity after. We've hired 3 of those 17, and others are working at great tech companies. So we're looking at the problem from multiple angles. And the last element is you can't be what you don't see. We say this all the time.
Yeah.
But we think it's very important to be visible. There's actually a thing in the Black community where if historically, if you were successful, you would hide. And that is for good reason, because whenever you built something in the past couple of decades, people would try to destroy it or take it from you or whatever, or ding you on price. We're in a different paradigm where, we're willing to take that risk, because if you don't know who's going to be successful or who's doing it, how can you be inspired to do it yourself, right? I mean, recently we've heard of some Black investors, but if you think about 10 years ago, outside of like Reginald Lewis, like who did you know? Like no one, right?
Right.
And so we're building in public, we're learning in public, and we think it's very important for both people that are aspiring to be entrepreneurs or aspiring to get an investment to know that you can be Black under 30 and do this. You can be Latino, you can be a woman and do this. You don't have to be a 45, 50-year-old white guy who worked at a tech company. And so we were trying to provide access, trying to democratize VC, and just make sure more people have access and opportunities.
No, and I so appreciate you saying that, because when we were researching all of the work you're doing, we couldn't put you in a bucket. There's an understanding that the VC space is very unique on the West Coast versus what it is on the East Coast. And it appeared that your model was almost a hybrid of that. So as you speak to, is teasing out the opportunities that the other two styles could perhaps miss. Mm-hmm. So that's phenomenal. So with that, it's a good segue into, now having done this and all this phenomenal work, tell us, like, if you could go back and wish you had done something differently, what would it have been?
That's a good question. I don't have a lot of regrets, really. I try to really live in the moment, and I try to make the best decision with the information I have. I've absolutely made missteps and stuff. Like, fortunately, none of them have been fatal, fatal to my career or anything like that. I mean, I'll give you one example. I mean, when I was applying, so I was in banking, and actually pretty early on, so banking, for anyone who doesn't know, like, there's analyst classes where you have, dozens of people that are all working at the same time in the same function. In my tech group, there was like a class above me who had been there for a year. We're now going to leave in a year or stay on. And he said, hey, you got to get out of banking, like, go to private equity. It's a better life, blah, blah. I'm like, all right, cool, sure. And immediately we start recruiting. And like, I don't know if that was the right information, but it was information that was fine for me. There's a program called Sponsors for Educational Opportunity. And this is actually, it has several facets as well, like MLT. They have a program that gets lower income kids into great colleges from high school. Then they have another program that's called Career Prep that's getting undergrads into investment banking. And then they have smaller programs for law and consulting. Then they have an alternative investments program, which is helping people that are early professionals, 1 to 2 years out of school, get into private equity. So that last program, alternative investments, I applied to. It would have been a game changer, because like, it's really tough to get interviews without a program like that, because they're basically going to a select few groups at Goldman and Morgan Stanley, and that's how they're picking their classes through headhunters. SEO kind of allows you to get around that, and you get interviews at all the top firms. So I did not prepare as much as I should have. Like, I was balancing work, I was balancing this. I showed up to my interview late because I didn't give myself enough time. Apparently going west to east in New York, I don't know anymore, but at least a couple of years ago, it took forever. I had to like run and get a cab. I was late. That was not a good way to start. I get into the final, well, there's like 4 or 5 interviews a super day. And the guy who's in front of me at KKR was in the real estate group. And I have real estate as an interest in my resume at the bottom. I don't know anything about, I mean, I like real estate. I'm like, oh yeah, you make money, you own property, cool. I didn't know anything about cap rates, any of that, like you, Melinda. Like I didn't know anything about that. I'm sure you're an expert. And like he asked me, and I just crashed and burned. And this is literally his job, and so those two things kind of got me out of the program, even though I think I should have gotten in outside of my lack of preparation. And it was tough. Like they only took 10 kids, so it was very competitive. There was someone in the program who like didn't even end up going to private equity. He ended up becoming a writer. I'm like, man, he had my spot. And so I had to live with that. And Henri, who I was friends with and then worked at ICV, he got in the program, right? And he was getting interviews at all the top firms. He didn't get them, but he got interviews. I'm like, man, like I just, and then it was a really painful process to eventually get the ICV job. I had like a lot of pain in that process. I didn't know if I was going to make it to private equity, personal problems, but still it felt real at the time. So from that, I learned like you can't control everything, but the things that are in your control, you got to be all over, right? There's no reason lack of preparation or lack of not doing what you're supposed to do should cost you opportunities. Like, okay, if the world changes or you have a health issue or things don't work out or someone doesn't like you, whatever. But if it's about you and your preparation or leaving early enough, like that should never be a reason to cost you an opportunity. And so I made a decision at that moment that I would never let that happen again. I've never let it happen again. So I've always ran through the line. When I was prepping for HBS, I went crazy with the process. It's been 4 years ago since my interview, right? But that was one thing I would have did. But I think I needed that L. Like it's good to take your L's early in life because then you learn from them and then you don't make them again. And so as I think about building the firm, fundraising, I've always been really pushing to the very end and literally making sure all my I's are dotted and my T's are crossed.
No, I so appreciate that. So what I'm hearing from you, you had after that experience.
I also didn't talk to anyone, by the way. I didn't talk to
you
people that
attitude?
were. No. I didn't talk to anyone who had done it before. Like I didn't talk to alums and SEO. I didn't talk to private equity professionals. And that's just probably a bigger point is that you don't know what you don't know. And like there gets to a point where you can't just do it on your own. You need to get help. You need to get insight from people that have done it before. And that was a mindset shift that's probably even bigger than the other things I mentioned, was like actually talking to people and learning the ropes, because even though you have all this information on the internet, it may not be what you need to know, and it may not be perfect for what you're trying to do.
No, that's phenomenal. And I hope everyone here is taking on, the idea of mentoring and coaching are essential to your success and growth at whatever level you are. I'm also hearing you had a made up mind that regardless of what happens that I can't control, my mindset, I own that space. Now, what I do want to do is dial back a little bit because I don't want to assume everyone on the call understands this space fully. Mm-hmm. Do you mind explaining or describing the difference between an angel investor, a venture capitalist, and private equity so that they can kind of see that they are very different?
Yep. So it's all related. It's all private market investing, mm-hmm. investing in private companies, but there are nuances. So private equity, just refresher, it's investing money in companies. Usually when people say private equity, they're talking about leveraged buyouts. So taking, control positions or buying the whole company from whoever the ownership team is. The goal is to grow it, grow profitability, grow the size of the company, sell it for a profit. And that's what you're doing. Leveraged buyouts means you're using debt to help finance the transaction. And that helps you boost returns. It adds some risk to the business for sure, but it means you can put in less money of equity and potentially get outsized. You can buy a bigger company with debt, and then you can also realize higher returns because you're levered up. Venture capital is investing in startup companies, well, historically startup companies that are growing rapidly, hopefully, and can generate returns. Like you never own a control position. You see all types of ownership stakes. A lot of firms invest between 5%. They buy 5% to 20% of the company. It happens in multiple stages. So private equity firms, usually invest on their own. The bigger deals, you'll invest with a syndicate of maybe a handful of firms. VC is almost always a syndicate, so you're one of many investors. And there's sequences of financing. You don't give the company all the money at once. You invest in a certain round. The company hits milestones. If it's still existing and growing, then they'll raise another round of financing and so on until it either gets big enough to IPO, get bought, or go out of business. VC has a very high failure rate. So venture-backed startups fail at about a 75% rate, about 75% not returning 1x on your capital. So it's a very risky proposition. And the only way the math works is for your winners, the companies that do well, have to be huge. There's a parallel dynamic. So what happens is in a portfolio of 25 or 30, you may have 1 or 3 companies that drive almost all of your returns. So it's a really interesting market, and you only have but so much control. Angel investing is investing in the same companies as VC, but instead of investing on behalf of institutions, you're investing your own money, which is probably smaller. You usually will be skewing towards earlier financings. You'll be investing along other angels and VCs. You don't control much, but it's a way to potentially participate in upside. But I recommend, if you're going to do it, not to do it for financial reasons. There's a whole market around angel investing, and people that do it the best have really good relationships with these founders, have some expertise that means that the deal's coming to them like, oh, okay, I worked at Uber or Stripe or Shopify, and I have all this domain experience. And so that's why this entrepreneur wants to work with me. If you're just a regular person and you see a deal come across, there's probably some adverse selection on why you're seeing it. So I think it's just really figuring out the market, talk to people. And you ultimately, whether you're doing angel investing or VC, you have to be very selective. The VCs only invest in 1 out of 100 companies they see. Angels invest at a higher rate, but they should still be probably not more than 5 or 10%. You can't do every deal you see, or you're going to lose money for sure.
Oh, wow. Thank you for that. And I hope that was helpful to those on the call who may or may not be familiar with the nuances between them. So if you don't mind, I want to segue into helping those on the call that may be preparing and have the idea that they want to pitch and submit. What's your process? What's your team's process for evaluating prospects?
Yep. So entrepreneurs that are applying for funding.
Yes.
Okay. See, I mean, there's a lot of lingo and terminology. So I recommend reading for sure. A lot of VCs hang out on Twitter. So that's a good way to get information, because we have a lot of information on our website. A lot of firms don't. And so following them on Twitter, seeing their blog posts, seeing their podcasts are a great way to figure out what they're doing. It's not an efficient way to get information, but unfortunately, it's how it works. For us, we're open kimono, or we're open with we have open doors rather, where we saw 1,650 deals in 2020. We saw 800 in 2019. 40% of those top of funnel came directly from management. They emailed us their deck. Others were referrals. You can either email us, the email's on the website, there's a form, or the best thing to do is probably get a referral if you know someone who knows us. That's probably the best way to go about it. Our process to literally screen all these opportunities, we at least look for a few minutes at every single one. We take calls with about 15% of all the deals we see now. Basically, to get to a call, you have to check our criteria that are on the website, like large market, decent business model. There has to be a reason why you personally are running this company. Like you have some relevant experience or some deep interest. It has to be the market that's probably growing. From there, we'll take a call, and then we have to decide if we want to move forward. And at this point, we're seeing really high quality deals. And so it's less about, is your idea good? It's more about, is this a fit for us this time? Is this better than other opportunities we're seeing? It's all about opportunity cost. So what we do is, we invest between $500K and $1 million usually in the seed round of a company, their first institutional round. The round size will be 1 to 3 million usually. And we're targeting 7 to 10% ownership. So some of those stats will indicate whether it's a good fit for us or it's too early. But either way, you got to kiss a lot of frogs. The maximum conversion you'll probably get from pitches to investors is 10%. So you have to talk to a lot of people and sequence it and try to create some scarcity, create some FOMO, and really have a process around getting people excited about your opportunity. At the early stage, it's mostly about, the story. People will look at you, they'll look at the market, but it'll be about the story you thread and how big you want to get. Because there's only so much you can do. Having customers, having revenue, all that stuff helps. It's traction. It shows that you're moving along. Having a product is great, but ultimately people are investing in VC or as angels because they see potential for this to be a big opportunity.
Okay. Are there any specific industries that you guys lean into, or is it really, generally speaking, an opportunity?
Yeah, we're generalists. I mean, right now we've done a lot of stuff in e-commerce, like e-commerce technology, software, fintech, and then we've done a little bit in HR, wellness, and prop tech, real estate tech. But yeah, e-commerce, software, and fintech are our biggest three. Most of our deals have gotten done there. But it's going to ebb and flow. I mean, we are focused on our mission. We're focused on the founders we're trying to back. We're trying to get capital in the hands of diverse entrepreneurs.
Right.
And I didn't even talk about why, but the why is the wealth gap, right? Like, we saw all this wealth creation in private equity where people are making tens of millions of dollars doing transactions or by investing in being a manager of capital. Mm-hmm. People of color have been locked out. Yeah. And if you look at it, the wealth gap, white families have 10x the median wealth of Black families, and 13x the median wealth of Latino families. It'll take 230 years for the wealth gap to close. It probably won't. It's going to grow. And all these things are really awful. And even if and all the stats I mentioned are normalized for going to college or having a 2-parent family and all this stuff. And what we found is, like, even if you go to a great school, get a great job, when it comes to wealth creation, it doesn't matter a whole lot. It's all about the capital that was passed down and how you invest that capital. It's about having equity and ownership. There's tons of Black doctors and lawyers that don't have a lot of net worth. And so we're focused on entrepreneurship as a way to grow wealth, participate. Other things that could help are government intervention. I don't think that's going to happen with the way it's set up, Electoral College and the Senate. Yeah. So I wouldn't count on that. So we think we can do what we're doing right now on venture capital, and hopefully that can cascade through the market.
No, thank you. I totally agree with you on that. I think, what's the statistic that it'll be 2050 or what year where African Americans will actually be at zero from a wealth building perspective? I don't remember specifically the year, but that's disheartening when you've got so many more African Americans that are educated and making higher incomes than previous. That gap still exists for the reasons you just described.
Exactly, because if you think about, like, student loans, which set you back. I have one I'm still paying off. It's different. Affluent white families, they'll take care of that, or they'll give you a down payment for your house, so you're accruing equity in that. Like, it's just not even fair. And I mean, wages have been, on a real term basis, flat for the last 40, 50 years. Stock gains have been great, but what you're seeing is huge wealth inequality that's only growing. And unless you get in the game and have, again, equity and ownership, it's going to be really tough to build wealth at parity. And so we're focusing on opportunity set from what we're able to do with Harlem Capital.
Oh, thank you for that. Now, you set me up for my next question so well. And that was, if you had to give 3 tips to someone presenting, you talked a great deal about readiness from the lens of storytelling, having your narrative like literally on point. What are 2 other things would you recommend that they need to really lean into?
Yep. So storytelling, paramount. Can't state that enough. Like, you have to convince people in your vision. The second thing I would say is, like, you have to talk to other people. Yep. There is definitely a mindset, and I won't say which groups do this and which groups don't. I think everyone does it. Some groups do it more than others, but, like, some people don't want to share, or don't want to share their idea, rather. And you feel like your idea is the best idea ever. And if you tell people about it, then someone's going to steal it and run off with it. Ideas are a dime a dozen. The biggest thing that helps you grow in entrepreneurship is execution. So there's people that talk all day, the people that actually make it. sometimes aren't even doing anything that innovative, but they're executing at a very high level. At Harlem Capital, we're executing at a high level. Our idea isn't that novel. So that's what I would recommend doing. So sharing your idea, getting market feedback, talking to customers is good. Talking to other entrepreneurs who have raised venture capital is key.
Right.
There's lingo, there's relationships that are all helpful to know. And so we just see some entrepreneurs who don't have that network. It may not be their fault, but you're at a disadvantage if you don't speak the language and know what people are expecting. Like VC firms, they want to make 100x on their investment, right? They want you to get to $100 million revenue in 3 to 5 years. Like things are ridiculous. They sound ridiculous, but it's possible. And you at least have to know that that's the goalpost they want you to get to kind of back into that. And that will mean you can only be in certain markets if you want to get to that scale. You have to have certain unit economics and all this stuff. And it doesn't have to happen. It probably won't happen, but at least you have to know what people are expecting to be able to confidently walk in the room and tell that story. The third thing is to create scarcity and FOMO, right? Fear of missing out. Like you can say the same thing, but if you don't have a competitive process, you're at a disadvantage. It's like dating. It's like, selling a home, right? People want what's wanted. You're not going to invest in somebody because they need it, or, oh, I could really use your help, or, things are so hard. Like, no, I am not asking for your help. I am giving you an opportunity to participate in the upside of this company. That's a key mindset thing. And so how you go about it, you have to be confident. You have to know your stuff, but ultimately it's like time capping your process. It's about how you give updates about what information you share and you highlight. It's about saying, oh, I have a term sheet from this firm. And it's really finding a way to generate hype and demand for your company. And the best entrepreneurs are able to do that in an efficient fashion.
No, perfect. I hope you guys captured those 3 big points. There's so many we've been able to gain. My next question. So we've been in COVID over a year now. I'm hopeful most people have saved a lot of money because we don't get to eat out as much as we'd like,
So.
nor travel. What have you learned during COVID that you guys have learned collectively that you've had to kind of execute against within this season?
Yeah, we haven't learned much new. I think what we've learned is really just doubling down on our strengths, and that really trends that were already existing are being accelerated. I think that's a better way to look at it. And so markets that were weak got exposed, markets that were strong got a lot of tailwinds. So a couple things. I mean, first is you're not doing business in person, or at least as much. We're not doing any business in person. And so you have to really figure out how do you engage with people, build a brand, get opportunities and source without meeting people. And fortunately, we were doing that already. So our sourcing has been primarily driven by social media. And that's one of the benefits of being under 30 and being a millennial is like, we understood this. And we also had a co-founder who was an influencer. So we just knew the market. We knew our brand. We know about content. We all have our own pages. We put out reports on diversity, as you mentioned. We announce when we do a deal. We've gotten some earned press. We have a podcast. We have a newsletter. We're kind of just like really having great coverage in the market, and it's all a positive feedback loop. What it does is it shows entrepreneurs what we're about. And so it decreases that friction. People know about us. They hear about us. Usually by the time we're talking to someone, it's not the first time they know, at least in the industries that we're focused on. Also, it's great for other VCs. Like a key way that VC firms invest and see opportunities is to get them from other VCs. So yes, you can talk to people once a month. You can meet them in person or whatever in normal times. But it's better if they're thinking about you all the time, not just when you talk, but all the time. And so if we're staying in their feeds, they think of us early in the process so we can get in and see great opportunities. So that strategy has been great. And now that people can't go to conferences, they can't just meet up and stuff. We've been doubling and tripling down on that. And it's been a huge advantage for us. We had always been, that's one. Two, we've always been working remotely. And it was out of necessity because Henri and I were up in Boston in business school. Brandon was in New York. The rest of our team were interns scattered. And so the only way we were able to operate was on Slack and getting it done asynchronously, not at the same time, not in the same place. And we've kept that mindset even between when we graduated in May of 2019 and before COVID, because it was more efficient. Like we got together in person when we needed to meet an investor or to meet an entrepreneur, but I'm not going to sit next to Henri just to work on stuff. Like it doesn't need to happen. So we were always focused on around optimizing, like working when you're most productive. If you have something you need to do it, work at night, work in the morning, whatever, I don't care, just get your work done. We do have our touch points weekly and whenever we need to. But that really is, I think, the new model where like the old school, like working in the office 9 to 5 is like, it doesn't even make sense. It's more expensive. It's not efficient. Yes, there's some serendipity you get, but you definitely don't need to do it 5 days a week, 8 hours a day. Like it doesn't need to happen. So we've been able to double, triple down on that. That's why I've been able to operate at over 100% capacity during COVID. And then the last piece was just like, how do you actually get conviction in meeting entrepreneurs? And we had that same mindset there. Like we met them more as a confirmatory step. If they were in New York, we would meet them earlier. But if they were in another city, we would see them at the end of the process after we commit. And so just being open and willing was great. And we actually realized you can know people better by not seeing them in person. Like, yes, you don't know how tall they are or whatever, but like you can have more touch points. You can have more time with them. You can have more reference calls with others. And so we actually have more thorough diligence now during COVID. Wow. We were able to move quicker. And our companies we've seen, for all the reasons I mentioned, are doing a lot better than our ones we invested in 2019. So I think it's all in a good direction. It'll be great to get back in person, but it's not a necessity. It's more of a nice to have.
No, that's perfect. And I'm hoping everyone capture that, systems, processes, structure is essential in operating as an entrepreneur who's running a business.
Yeah.
What I would like to do before we jump into Q&A is, you're right. You guys are everywhere, chop it up, right? Please subscribe to Harlem Capital on YouTube. Where can they find you? Where can they connect with you across your platforms?
Yep. So I have to change my setting real quick so I can talk to everyone. All right. So this is our website. And then this is my Twitter handle. So you can just follow us there. I mean, Harlem.capital is our website. At Harlem Capital is us on Twitter, Instagram, LinkedIn. And so just follow us. Once you find one page, you'll see all of it. But yeah, check us out. I mean, there's a lot of cool stuff. We're trying to just increase access. We have some cool stuff. We like to celebrate others. And so it's not just about being us-centric. It's about, even if we don't invest in an entrepreneur, even if we don't know a firm well, but we see they're doing a thing and they're, of color, we'll post it. And so it's a cool way to figure out all things that are going on in the ecosystem is by following our pages.
No, perfect. So I'm going to check the Q&A. In the meantime, my question to you is, the National Black MBA, there are 40 chapters around the U.S. We were founded in 1970 at the University of Chicago School of Booth. And so tremendous amount of talent just around the country. Where do you see there to be great opportunities for Harlem Capital and a National Black MBA as an association? Where are the intersecting points where we can bring value to you, to your company, and the same for us?
Yeah, let's chat and see. I mean, we're investing in companies.
We're not going to hold you to anything.
No, it's fine. I mean, we're investing in companies, so we always like to see different deals. So if alums or current participants in the program are starting companies, we'll love for you to send it to us directly. That's one element. We have an internship program. We just closed it for the summer, but we do it 3 times a year. And so it's not just for undergrads. We actually only take 1 to 2 undergrads. We usually have a class of 6. We take MBAs. We take people that are working full time. Yeah. And our internship program is part-time. It's remote. You just need 12 hours a week, plus or minus. You can work with us and really get into VC. And even if you apply and don't get it, it's very competitive. We now have a talent portal where we're connected with other firms. Where we're basically saying, here are all our alums, plus here's all of the top applicants, the top 100 applicants or whatever. Here's job opportunities. Y'all connect and let's get each other hired. Like that's what we're about right now. So that's a great way to get exposure. Those are the biggest things. And we're always open to other things. We haven't done a lot of formal partnerships, but we have a lot of ways to get connected. I mean, PayPal and Apple and Bank of America all recently announced investments in Harlem Capital in our future fund. So we're just seeing a lot of connectivity. I think, the problems that have been discussed since the summer aren't new at all. I mean, at all, but there's more focus on it from the mainstream. And so I think we're still in a period of time where, like, if you're a Black in entrepreneurship or in investing, like, it's a better time than ever to be in this market. There's more capital flowing. There's more insight, and you can actually say I'm a Black entrepreneur. Like 5 years ago, that probably wouldn't have been that great for marketing, but now you're like, hey, like, I'm a Black firm focused on Black people. Like, sure, like, people get it now, but it will come in waves. Previously it was women, and before that, maybe it was LGBTQ, but like the tide will shift. Unfortunately, they the people that control the capital will focus on one cause at a time. Our argument is, like, it's not about philanthropy, it's about good business, it's about giving access opportunities. But we're in a window right now where, like, people are getting money. So if you're thinking about it, then now is a great time to be applying for roles, for starting companies, and having a fairer shot than ever to make things happen.
No, we appreciate that. And we appreciate you teaming up with us on this, in this kind of setting as well.
Yeah, no problem.
So I've got quite a few questions here.
And
we know your time is precious. Yeah. So I'm going to kick off a few of them. Some of them you've answered already. Okay. The first is from Camilla. I hope I pronounced that correctly. Her question is, what advice would you give to someone who wants to become a social entrepreneur?
Social entrepreneur, meaning, I guess, big entrepreneur that is, I'm assuming it's just like doing good for the world, being mission driven. Yeah, I mean, have a good idea. I mean, obviously that's one. I mean, it's all about execution. I think what you'll see, though, is, it's great to have a good mission. I think the best entrepreneurs are always making sure their business is self-sustaining. So I recommend anyone, we have this approach too, is like not necessarily looking for philanthropy dollars, not necessarily looking for grants, looking for a way to, you don't have to have like crazy margins, but you should have enough margin in your business that you continue to self-fund, right? Or at least have a way to grow and become big. There's different impact firms that are more open to it. Like there's K4 Capital, out of Silicon Valley, who's done a really good job with this. There's SJF Ventures. I think they're in North Carolina and New York. They're doing it. There's Impact America Fund. And so you can just have a conversation with these firms. So before you're raising money, I would go reach out. But I would say, like, think about what you're doing. Is it scalable? Can you actually, because the way we look at it is, if we make more money, it will give us more fuel to invest in more people and have a bigger impact. Like, there's no beauty in being stuck at a small scale. It's about helping the max amount of people. And if your business works and is actually gross margin positive and profitable, you can do more. So I recommend still being very focused on the numbers, still being very focused on growth, and you can still do great work, but it will all line up to be a way where you can impact more people.
Okay, thank you. Thank you for that. I have a question from Jennifer. It's two-pronged. I believe the first one you answered early on in the conversation, which is, how did you learn about programs you took part in? So a lot of the programs you spoke about, like the lower income, the undergraduate programs, and the programs you participated in early on in your career, how did you learn about those? And outside of the relationships created through those programs, how did you create relationships with the right people?
Yeah. I mean, Google is your friend. You can always find stuff, but like, it may not be the right thing before the deadline. And the most efficient way is to talk to people. And again, this wasn't one of my strengths. I got good at it recently, but like, if you broadcast what you're trying to do, and I know it's not the most natural thing for everyone, more people can help you. You can keep your idea to yourself, worth trying to do to yourself, keep your plans to yourself, and like, no one can crack in there and will be able to help you. But if you tell people like, hey, here's what I'm trying to do, I want to go into this school, or I want to go in this industry, you'll hear about it. We at Harlem Capital, we like to provide those opportunities. We're not going to cover all things at all times. Definitely look up Management for Tomorrow or SEO if you're trying to get into these careers. For schools, there's the Jersey Seas program, there's Prep for Prep, which is more in New York, there's a better chance, which I think is nationwide. Like there's a lot of these different programs, but the biggest thing is like hearing about it at the right time.
Right.
And so the biggest thing you can do is, again, tell people what you're trying to do, and hopefully someone connects the dots. You'll eventually find central connectors. You'll find people that have a wealth of information. We try to be that. But in general, I recommend everybody, within reason, tell people what you're trying to do, and people can help you.
Perfect. We've got a couple of questions around this idea of if it's a startup, do you recommend they go through an accelerator program before seeking funding? Like the process, is that something you recommend they consider?
It's a tough balance. I mean, not a tough balance. I mean, you got to know where you're at. So
yeah.
I think it's good to know the typical profile of who gets funded, not like race and gender. I mean, we already know how that works out. It's mostly white guys that get money, but in terms of like where they usually work or whatever, and it's going to vary for case by case. Accelerator programs are good. They're helpful. Like if you get in a Y Combinator, you're pretty much guaranteed evaluation if you get a transaction done. If you go to Techstars, you'll get further along. They'll help with their business model. But it doesn't come without cost, right? They may give you 100K, 125K, but they take 6-7% of your company. That's significant. It doesn't sound like a lot, but it adds up because it's directly coming out of your ownership, and your ownership is only going to diminish over time. So, 6 out of 22 of our companies are Techstars companies. And we definitely see sometimes women and people of color have to concede. Like at Harlem Capital, we had to sell some of our company and our firm to CPG to get in business because, again, this is harder, and you got to do what you got to do sometimes to get in business. I will limit it, though. Know what you're getting. Come prepared. Make sure you have a checklist of what you need to get out of it, so they're actually giving you the value that you command for that ownership. Right. That's really important. And then don't do a bunch. Like do it once, sell your company once to an accelerator, a little bit of it, or get some outside help for some tough terms. Don't do it a bunch of times. We see a couple people that have done a bunch, and then you look that up and they don't own that much of the company anymore. You really do want to keep as much ownership as possible. Like you don't get to be in Bezos or Zuckerberg or Rich Dennis and Sundial Brands if you're selling a bunch of your company. You got to retain it, really see the value, not just think about today, but think about 20 years. And sometimes it's painful, but you got to do it. The other side of that, though, is you rather have a small percentage of a big pie than 100% of a smaller pie. So it's a really delicate dance. But I think the key thing is knowing and having confidence that you're going to be more valuable over time. So don't give up too much in any one round of financing. But I think accelerators for anyone who isn't technical, doesn't come from entrepreneurship, doesn't come from tech, I think it's definitely a path to consider. You apply, and then after you get in, decide if you think it's right. And I'm happy to talk to anyone about that, depending on your scenario.
Perfect. And I know we're winding down. We got 2 minutes left. I hope everyone is finding this session, this fireside chat, very enlightening, engaging. I know we've got quite a few questions, literally 20.
Okay, I could take one.
We're going to be able to take one more. And so I'm going to end with Mr. Jonathan Wilson. Your question is, how important is traction or product market fit to your process? Has your firm ever invested where you didn't see that traction?
It's very important to us. And I think what you generally see is there are people that raise with an idea or pre-product market fit. They generally don't look like us, at least us on this panel, right? And so you just got to know what you're dealing with. Like the more traction you have, the more confidence you'll inspire, the best firms you'll work with, the best terms you'll get. And it means you can get the same amount of money with giving up less of your company, or you can get more money for the same ownership give in your company. So it's better for you to kind of get as far along as you can. There's a balance though, right? Because if you take too long, then you'll miss out on opportunities to grab market share. So again, it's unfortunately some gray area. We invest pre or post product. You at least have to have whatever you're trying to do working. Like if you're selling widgets, which you don't usually invest in, like that has to be done. And then if you're selling software, we at least want to see some iteration and some customer interaction. It's very important that you test it with the market because, again, ideas are dime a dozen, execution is everything. And so until you get feedback from the market, you actually know that customers want this, are willing to pay for it, willing to engage, it's really tough to know if you have a good business. And one thing to keep in mind is like product is important, but the best product doesn't win, the best distribution wins. And so it's not just about the product or about the software, it's about your marketing, it's about your sales channel. At Harlem Capital, we've been focused a lot on distribution. Our product is investing in companies. Our distribution has been our brand, it's been our media, it's been our relationships. And so I think focusing on that is good because again, our idea isn't novel, but it's all been about how we've been able to execute on that. And that's been because we've been able to focus on our strengths of distribution, stay in people's inboxes, stay in people's feeds. And as a result, we're able to win because it's a positive feedback loop where winners win. And once you have some success, you get more people that want to back you. And then it's a self-perpetuating cycle. And so I recommend for sure trying to get as far along as you can, but also just knowing what was typically done in the market for when deals get done in terms of revenue traction.
Perfect. Well, I know we are at the hour. We super appreciate you again, Jarrid, for just lending us this hour. Like I said, there's so many questions that many of which you've answered. I want to remind everyone, the National Black MBA will record this and it'll be accessible to you. And we look forward to additional opportunities to kind of team up. And I'm going to hand it off to Paula, but we've got one personal question.
And we don't even have time for it. I'm so sorry.
That's okay.
This was absolutely incredible. Jarrid, thank you so much for your time, as well as being willing to put yourself out there with the connection. So if you are watching, shame on you if you do not connect with him with all of that information. Melinda, you've been dynamic as I knew you would. So thank you for your time as well. All of you all are listening. Thank you for this time that you've had with us, and your feedback is so important to us. So you will see a survey link here. Please fill it out. The first 25 to fill out this survey will be entered in a chance to win an Amazon gift card. So do not delay. Again, let us know how we're doing with regards to programming, and please enjoy the rest of your day. Take good care.
Bye, everyone.
Take care. Thank you all.
Bye. Thanks, Jarrid. Paula.